Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate. In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a half percentage point to 4.75% to 5%.
That is a big rate cut, guys. Hey, what's up, chat? How y'all doing, man? I just come on because this is stuff that will directly affect you in your life. Everybody's focused on P. Diddy. Everybody's focused on what's going on in the world. Pay attention to how people are just trapped in the matrix. That type of stuff that has zero effect on your life, you're attracted to. Pay attention. I watched it. I see it. Am I going to jail with Diddy? No. Am I going to be affected by what goes on with P. Diddy? Absolutely not. Does it matter what happens to P. Diddy in my future or my life? No. Zero. I watched it. I pay attention to it. It's crazy. But the way the media and the way the mind is altered, I guess we all would be relatives and related to exactly who P. Diddy is. We all are related to him, I guess. I mean, he has an effect on everybody's life, I guess. Your focus is in the wrong place. This, what you need to be watching, because this could be taken and putting money in your pocket, helping you guys become homeowners for the first time. All right. What you're looking at now is the Federal Reserve has cut interest rates for the first time since the COVID pandemic came out here. They've been raising interest rates. Here goes a cut. So your mortgages, your credit card payments, all that stuff is about to get very less expensive. And I've been saying this would happen. It also makes the candidate that's in office right now look good. So this could be a ploy, to retain voters. There's all type of stuff going on right here. But at the end of the day, none of that stuff matters. What matters is you and your family. So let's pay attention to this. What matters that can help you in real life, and stop worrying about so much bullshit that don't matter. So let's get it.
This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting.
What's up, chat? What's up, Ismail? Ismail on it. My boy Ismail sent me a message. I'm watching it. I look at this phone. I see Ismail. He said, Bez, they just cut interest rates. I'm like, bruh, damn right. I had planned to go live, but I said I might as well go live and show the people the actual speech, so it won't be so foreign to them. This is Jerome Powell, the man that controls the money. Monetary policy controls the world, man. You got to pay attention to this stuff. This is the big stuff that we should be focused on, like really. So, C. Childs in the building, V. Chance in the building. We got Screenshot Poppy in here. Black Queen in the building. Juicy Fruit. Salute to you, Juicy Fruit. Member for 10 months. Appreciate that membership, man, Juicy Fruit. Mr. T. 16 White. Appreciate you for pulling up, man. We just in here talking about this a different way that you might hear. I'm a little bit more street. So I just I don't use the terms that these people use, but I damn sure understand it. So let's get it.
We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with
What he just said was they're projecting that the rate going to be lower next year. So it seems that more rate cuts are on the horizon. But we just going to chill, take it day by day.
the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve Leisman, CNBC. Thank you, Mr. Chairman, for taking our questions. In July, you said you weren't necessarily thinking about a 50. You didn't want to be specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP running 3%. So what changed and made the committee go 50, and how do you respond to the concerns that perhaps it shows that is more concerned about the labor market? And I guess, should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one question. What was the second and third?
How do we make the, sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So a couple things. A good place to start is the
guy just asked, how do we know if there's going to be any more interest rate cuts coming in the future, whether 25 or 50? Now, I need to let you guys understand what that is, because you understand what everything about rap music and what Diddy does and everything. Because you know why? Because you pay attention to that. What the 50-point basis cut means is 0.50. They cut from the federal funds target, right? And then you got 0.25. That would have been a small cut, but it still would be a cut nonetheless. What he just did was a big cut. He did a big interest rate cut of 0.50. So that's 50 basis points. Okay. So when you guys trying to understand this, focus right there on what does he mean when he says that? So this guy has just asked the question whether it be, how do we know if it's going to be more rate cuts coming in the future? And then here goes his response. Guys, I know you don't like it. You don't want to understand English, but this is what you should be paying attention to. I'm being honest. You know, this is why you stay stuck in the same spot because you have no understanding on what's going on here. None. You know, you're more worried about outside stuff, man. You know, this guy is one of the most important people in the world, and you're not paying attention to him. Yeah, this white guy on your screen right here. You know, you got to pay attention to this stuff, man. Then you start to understand it. You know, then you start the same way you understand everything about P. Diddy, because your brain focused on over there. What happens to him has absolutely nothing to do with your life. But just watch the people, how they flock. And then understand why we in the situation we in. You're trained to do this. I'm trying to break the cycle. I'm trying to break the cycle, man. You know, because I thought about going live, and then I said, nah. And then I said, you know what? There's some people that might want to learn a little bit. In the meantime, we just so much foolery going on. You got to break the cycle, man. It starts with you. You know, you got to be the one to say, you know what? Let me listen to this guy. What is he talking about? Then you start to understand it a little by little. You know, same way you memorize those rap lyrics, those song lyrics, right? Same way you memorize that stuff that pays you nothing, that does nothing for you, absolutely nothing for you, but take away money because you like to go buy it and watch it and go to concerts and all of that stuff. Better pay attention, man.
Is the SEP, but let me start with what I said, which was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid? Or does it suggest that maybe people see the short-run neutral as a little bit higher than long? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know, if you go back, we know that the policy stance we adopted in July of 2023 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%, inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level. So the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is appropriate in real time. But what you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard?
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion.
Like, you see, that question don't even matter, but I let him answer it. But in my opinion, that's a waste of a question. Does it matter how close the decision was? The decision was made, right? But whatever.
If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a lot of discussion back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would
What's up, Honey69? How you doing? Appreciate you pulling up.
add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year. All 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that, now that this is in the books, can you give us some guidance as sort of follow up to Steve on the pacing here? Would you expect this to be running every other meeting once we get into next year? For
Yeah,
example,
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush.
This guy is asking him questions. I don't understand. He's trying to get a gauge on what the Federal Reserve intends to do in the future, and we know that they're not going to disclose that information. This is why he's saying we're going to take it meeting by meeting. He's not going to give you any tips on what to do. He's going to keep it meeting by meeting, right? But I want to show you guys something. Let me go over here and show you something, right? Look. This is what I be talking about, right? We were here. This is a monthly chart on the S&P 500, right? Your focus is nonsense, right? All over here, your focus is on bullshit because you're trained to think this way, right? You're trained to think this way. I'm on here talking, hey man, rate cuts gonna come. I think rate cuts are gonna come, right? And look, the market rises. You miss money because you focus on dumb shit, right? It's up 1 point. This is just the S&P 500. Okay, this is a weekly chart. Look at what's going on. We in an uptrend, right? This is today, right? So today the market is trying to digest this information. I predict we might have a little bit more upside coming because of this news, but you don't understand this because you don't care to understand it. I'm trying to help you, man. Let's look at the crypto market. See what the crypto market is doing. Okay. So when we look at the crypto market, we can see, let's look. What are you paying attention to? We were down here. This is the daily chart. Okay. Let's go to 7 days. Right. We were down here just 2 days ago. Right. Look, interest rate cuts come, the market starts to rise. Your focus is everywhere else in the world. It's just like zombies. They like to call you sheep. Just like everybody else, paying attention to nothing. Look, I've been talking about this. I've been saying it was coming. I've been on this microphone saying this was coming. Look, ping, right? You see, we had 60 grand. We up almost 5% today, and just in Bitcoin. Why is that? Maybe because this guy is talking, right? But you want to worry about Diddy, right? It's everybody. This is not just, one person. Let's look. All right, this is what I like. XRP. I did a whole live stream on this the other day. All right. I've been saying I want to buy. I've been saying interest rates cuts are coming, right? This is 1 day. So we were dropping most of the day, right, until this meeting. And then he announced these interest rate cuts. Now he's starting to rise. All right. If you look in the past 7 days, look at the market anticipating these interest rate cuts. Right now, the market is undecided. Is why you see this choppiness. But I predict we're gonna go higher. All right. Where's your mind at? What is anybody doing for you? What is anybody doing for your family? Pay attention to what really matters. Okay, that's what we gonna do. Hey, can you guys hear? I got a message saying the audio went out. Let me make sure you guys can hear. What up, V Mac? Appreciate you pulling up. Matter of fact, I'm do it over, start it over, make sure that you can hear it.
A good, strong start. But and I'm very pleased that we did. To me, the logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go carefully, meeting by meeting, and make our decisions as we go.
Gina.
Hi, Chair Powell. Gina Smilik with the New York Times. Thanks for taking our questions. You and your colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
So, again, the labor market is actually in solid condition. And our intention with our policy move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Sorry, Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, does today's action constitute a catch-up in action given recent substantial revisions to the employment data? Or is this larger than typical rate cut a function of the elevated nominal level of the policy rate such that an accelerated cadence could be expected to continue?
Okay. Multiple questions there. But so I would say we don't think we're behind. We do not think we think this is timely. But I think you can take this as a sign of our commitment not to get behind. So it's a strong move. Sorry, your other question was?
Well, is this about what happened in the employment data between this meeting and the last meeting, or is this about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium?
So I think it's about, we come into this with a policy position that was put in place, as you know, I mentioned in July of 2023, which was a time of high inflation and very low unemployment. We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving sustainably under 2%. So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case,
He babbling right now. What he's saying? Everybody doesn't don't think that they're going to continue at this rate of cuts because this is a very aggressive cut. In my opinion, this was done. We could have been start cutting interest rates. You heard him say other countries were starting to cut interest rates already. We've been slow. America's always slow with stuff like this. But I told you guys the election was coming, and this is gonna make the candidate look good. This is what now they can use this as when they get to doing their talking points and say, well, we're having a better economy. Why? Because economy, what he just did allows people to borrow more money for cheaper, right? So you might see the housing market. People can now try to start buying homes and cars. All of that stuff is a direct result of these interest rate cuts. That means you can borrow money for cheaper. That's what the interest rate cuts mean. Okay, that means you can take out loans and stuff at a cheaper rate, right? So I just believe in my brain that I've been saying closer to election, they're going to do this. And they did it. And he did it in an aggressive manner, right? So let's keep paying attention to what's going on. Does it care to me whatever happens? No, but this will directly affect my portfolio. You know, my crypto portfolio, my stock portfolio, right? And I already have my home. They can't mess with my interest rate. I got the interest rate at lows. So you guys need to pay attention to what's going on here, right? But it also affects your pocket. He's telling you inflation has been coming down, right? People have been saying inflation is up. Inflation is up. I've been saying inflation is actually coming down, right? You just don't see it because you're not paying attention to it. Last time I went to the gas pump, the gas was $3, right? Inflation has literally been coming down slowly, but surely it's coming down. Now they wait until right before the election to do this at a 50 basis point cut. That's pretty high, right? Why? So they can have talking points when they go up and with their debates and stuff like that. So it's just my opinion. I knew it was coming though, but you would have had to been invested in order to reap the benefits of this stuff. Now, people that's looking to buy homes, maybe it's a good time to start looking to buy a home, right? With these interest rates cut. Why? Because you know you pay interest on your home, you know, and now your interest rate would be a little lower. People that bought homes and they willing to sell right now, maybe you might look towards selling your home, you know. You might look towards buying and selling, right? You can refinance your home. Anybody that's been buying these homes when these interest rates were sky high, now they're looking to refinance their homes, right? This is stuff that you should be understanding. The hell with Diddy. He's not in your family, or is he? In your brain.
What you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to
What up, SJ?
a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, but that's what the base case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff. With a larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization. And so for a time, you can have the balance sheet shrinking, but also be cutting rates.
Colby.
Thank you. Colby Smith with the Financial Times. Just following up on Gina's question on rising unemployment, is it your view that this is just a function of a normalizing labor market amid improved supply, or is there anything to suggest that something more concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct follow-up to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. You know, so you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months, and this bears watching. Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market, but this is more sort of 2018-17. So the labor market bears close watching, and we'll be giving it that. But ultimately, we believe, with an appropriate recalibration of our policy, that we can continue to see the economy growing, and that will support the labor market. In the meantime, if you look at the growth in economic activity data, retail sales data that we just got, second quarter GDP, all of this indicates an economy that is still growing at a solid pace. So that should also support the labor market over time. So, but again, it bears watching, and we're watching.
And just on the point about starting to see rising layoffs, if that were to happen, wouldn't the committee already be too late in terms of avoiding a recession?
So that's our plan, of course, has been to begin to recalibrate. And
This lady is asking him good questions. This lady right here, whoever she is, she's asking him good questions. Instead of the other question like the other guy just asked, she asking him good questions.
As you know, we're not seeing rising claims. We're not seeing rising layoffs. We're not seeing that, and we're not hearing that from companies that that's something that's getting ready to happen. So we're not waiting for that, because there is thinking that the time to support the labor market is when it's strong, and not when you begin to see the layoffs. There's some lore on that. So that's the situation we're in. We have, in fact, begun the cutting cycle now, and we'll be watching, and that'll be one of the factors that we consider. Of course, we're going to look at the totality of the data as we make these decisions meeting by meeting.
Michael McKee with Bloomberg TV and Radio. To follow up on that, what would constitute for you and the committee a deterioration in the labor market? You're pricing in basically by the end of next year 200 basis points of cuts just to maintain a higher unemployment rate. Would you be moving to a more preemptive monetary policy style rather than, as you did with inflation, waiting until the data gave you a signal?
No, we're going to be watching all of the data, right? So if as I mentioned in my remarks,
Guys, you see how he went to answer that question? He's nervous right here. Watch this.
going to be watching all of the data, right? So if as I we're
Inflation, waiting until the data gave you a signal?
we're going to be watching all of the data, right? So if as I mentioned in my remarks, if the labor market were to slow unexpectedly, then we have the ability to react to that by cutting faster. We're also going to be looking at our other mandate, though. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%, over time. So, and policy we think is still restrictive, so that should still be happening.
I'm just curious as to how sensitive you'll be to the labor market, since you forecast we are going to see higher unemployment and it is going to take a significant amount of monetary easing to just maintain it.
So, what I would say is we don't think we need to see further loosening in labor market conditions to get inflation down to 2%. But we have a dual mandate, and I think you can take this whole action as take a step back. What have we been trying to achieve? We're trying to achieve a situation where we restore price stability without the kind of painful increase in unemployment that has come sometimes with disinflation. That's what we're trying to do. And I think you can take today's action as a sign of our strong commitment to achieve that goal.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You're describing this view that you don't think you're behind when it comes to the job market. Can you walk us through the specific data points that you found to be most helpful in the discussions at this meeting? You've mentioned a couple, but would you be able to walk us through what that dashboard told you as far as what you know about the job market now?
Sure. So we'll start with unemployment, which is the single most important one probably. You're at 4.2%. That's, I know that's higher than we were used to seeing numbers in the mid and even below mid threes last year. But if you look back over the sweep of the years, that's a very healthy unemployment rate. And anything in the low fours is a good labor market. So that's one thing. Participation is at high levels. It's, we're right adjusted for demographics, for aging. Participation's at pretty high levels. That's a good thing. Wages are still a bit above what would be their wage increases, rather, are still just a bit above where they would be over the very longer term to be consistent with 2% inflation, but they're very much coming down to what that sustainable level is, so we feel good about that. Vacancies over, per unemployed is back to what is still a very strong level. It's not as high as it was. That number reached 2 to 1, 2 vacancies for every unemployed person, as measured. It's now below around 1, but that's still a very good number, I would say. Quits have come back down to normal levels. I mean, I could go on and on. There are many, many employment indicators. What do they say? They say this is still a solid labor market. The question isn't the level. The question is that there has been change particularly over the last few months. And, so what we say is as the risks, the upside risks to inflation have really come down, the downside risks to employment have increased. And because we have been patient and held our fire on cutting while inflation has come down, I think we're now in a very good position to manage the risks to both of our goals.
And what do you expect to learn between now and November that will help inform the scale of the cut at the next meeting?
More data, the usual. Don't look for anything else. We'll see another labor report. We'll see another jobs report. I think we get a second jobs report on the day of the meeting, I think. Or no, on the Friday before the meeting. And inflation data. We'll get all this data. We'll be watching. It's always a question of look at the incoming data and ask what are the implications of that data for the evolving outlook and the balance of risks, and then go through our process and think what's the right thing to do. Is policy where we want it to be to foster the achievement of our goals over time? So that's what it is, and that's what we'll be doing.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. We've only been running a little above 100,000 jobs a month on payrolls the last 3 months. Do you view that level of job creation as worrying or alarming, or would you be content if we were to kind of stick at that level? And relatedly, one of the welcome trends of the last couple of years has been labor market steam coming out through job openings falling rather than job losses. Do you think that trend has further to run, or do you see risk that further labor market cooling will have to come through job losses?
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. And the other thing is just the slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt.
All right, so we guys can understand that jobs play a major part in his decision. The jobs, the unemployment level, and things like that play major part in these guys' decision. Also with inflation and the prices, that's another part. So we got to start to understand what are they talking about here. He just said the influx of people coming in across the border is skewing the numbers because it's more unemployed people now, but that's skewing the numbers basically is what he's saying right here. It's amazing to me that people complain about inflation and they keep saying inflation is high, but they won't pay attention to this. This guy right here controls the monetary policy. You got to pay attention to this. This is more important. But let's keep it going.
That job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I think we are. It's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment. But it's been a great ride down. I mean, we've seen a lot of tightness come out of the labor market in that form without it resulting in lower employment.
Thanks, Chair Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds rate. Now, some think we're heading in that direction again. What's the likelihood that cheap money is now the norm?
So this is a question, and you mean after we get through all of this? It's just a great question that we can only speculate about. Intuitively, many people anyway would say we're probably not going back to that era where there were trillions of dollars of sovereign bonds trading at negative rates, long-term bonds trading at negative rates. And it looked like the neutral rate might even be negative. So there was people were issuing debt at negative rates. It seems that's so far away now. My own sense is that we're not going back to that. But, honestly, we're going to find out. But it feels to me that the neutral rate is probably significantly higher than it was back then. How high is it? I just don't think we know. We only know it by its works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
Yeah. So this.
Wow, I like that question. Let's run that question back, because that is what I know, what I feel is going on here. That was a good question, sir. Appreciate the question, sir. Now watch he dance around this question. Watch this.
Works.
And one more. How do you respond to the criticism that will likely come that a deeper rate cut now before the election has some political motivations?
It does. How do you respond that a deeper rate cut now before the election has political motivation? Bingo. Watch he dance.
Yeah, so this is my fourth presidential election at the Fed, and it's always the same. We're always going into this meeting in particular and asking what's the right thing to do for the people we serve, and we do that, and we make a decision as a group, and then we announce it, and that's always what it is. It's never about anything else. Nothing else is discussed, and
Cap.
I would also point out that the things that we do really affect economic conditions for the most part with a lag.
Cap. You're capping because inflation been coming down. Y'all could have been start cutting interest rates. You are a cap, sir.
So nonetheless, this is what we do. Our job is to support the economy on behalf of the American people. And if we get it right, this will benefit the American people significantly. So this really concentrates the mind. And, it's something we all take very, very seriously. We don't put up any other filters. I think if you start doing that, I don't know where you stop. And so we just
You're doing it. You're capping.
don't do that.
Jolene.
Thank you, Chair Powell. I'm Jolene Kent with CBS News. My first question is, very simply, what message are you trying to send American consumers, the American people, with this unusually large rate cut?
Did you hear the lady? This is an unusually large rate cut. And then the guy right before asked her, does this have any political motivation? Man, stop playing. This is all political motivation, but I don't give a damn. I'm going to use this information and invest in quarterly because my portfolio matters, right? What I have, my stocks, my home value, maybe it's time for me to start thinking about getting some equity out my house, while they're cutting the interest rates, because cheap money, did you hear the other question? They said, will cheap money become the norm? What that means is, will the rate that you borrow your money at, the interest that you have to pay back on the money you borrow, will the cheap become the new norm? Because now they're starting to cut the interest rate. So now you could almost imagine that people are going to be spending a lot of money come these holidays, this holiday season. We're getting closer to Christmas. All of this stuff plays a part,
I would just say that, the U.S. economy is in a good place, and our decision today is designed to keep it there. More specifically, the economy is growing at a solid pace. Inflation is coming down closer to our 2% objective over time. And the labor market is still in solid shape. So our intention is really to maintain the strength that we currently see in the U.S. economy. And we'll do that by returning rates from their high level, which has really been, the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
Just a quick follow-up to that. Listening to you talk about inflation moving meaningfully down to 2%, is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No, we're not. So
It's a cap. They are, because they wouldn't have cut the rates that big. They are declaring victory over inflation. That's obvious. And now we're gonna start seeing more rate cuts. This dude is capping, man. Why else would he make such a big rate cut? This is this is not normal for them to cut so much. You know, a 25 basis point, which is 0.25%. That's normally a rate cut. A 50 basis, which is 0.50, that's a big cut. This dude is a big cap, yo.
inflation, what we say is we want inflation, the goal is to have inflation move down to 2% on a sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be, around 2% and close to 2% for some time. But we're certainly not we're not saying mission accomplished or anything like that. But I have to say, though, we're encouraged by the progress that we have made.
Hi, Katerina Saraiva with Bloomberg News. I just would love to know kind of how the committee is thinking about the persistence we've seen in housing inflation. Do you think you can return to 2% with housing inflation where it is? Yeah.
So housing inflation is the one piece that is kind of dragging a bit, if I can say. We know that market rents are doing what we would want them to do, which is to be moving up at relatively low levels. But they're not rolling over. The leases that are rolling over are not coming down as much, and OER is coming in high. So, it's been slower than we expected. I think we now understand that it's going to take some time for those lower market rents to get into this. But, the direction of travel is clear, and as long as market rents remain, relatively low inflation over time, that will show up. Just the time it's taking now, several years rather than just one or two cycles of annual lease renewals. So I think we understand that now, but I don't think the outcome is in doubt. Again, as long as market rents remain under control, the outcome is not in doubt. So I would say it's the rest of the portfolio, or of the elements that go into core.
Now they talking about the housing market. Okay, in my opinion, him cutting interest rates is going to make people buy more homes, which is going to make the housing market go up a little bit. That's just me thinking, right? So I don't know what he talking about, how they going to stay the same. If people start buying more homes, that means the price of the homes going to go up, which means your rents are going to go up eventually. So I don't know what he's talking about right here. I'm listening just as well as you guys, but he's talking about the housing market right now.
PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood?
That's what I just said. That's the same thing I just said. Shout out to the lady in the building. That's the same thing I just said. I just said it.
Colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
The housing market, it's hard to to game that out, the housing market is in part frozen because of lock-in with low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to.
That's me. I don't want to sell my home because I got a extremely low interest rate. See, they're talking about people like me. When I bought my home during the pandemic, I got a 2.25% interest rate on it. Right now, the interest rates are around 6%. So basically, this lady is saying when you cutting these interest rates like that, it's going to encourage people to go buy homes now because they're going to get it at a cheaper finance rate. So all that means is the money you borrow, you pay back at a cheaper rate, and it might cause the housing market to rise even more. That's what I just said. So let's hear his answer.
To refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And, where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized and getting the housing cycle normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guida with Politico. Just following up on some of the labor market talk.
Guys, I hope you understand why real estate is so valuable. Just listening to that answer he gave, he's saying it's very difficult to gauge the housing market. This is why real estate is so valuable, right? Because like he said, he did say it would encourage people to sell. But once again, I'm not selling my home right now at a 2.25% interest rate to then move into a new house and a new mortgage at 6% or 5.5% interest rate, because it's going to cost me more money to borrow that money. So I wouldn't want to move right now. As they start lowering the interest rates, I might decide to move. But if I move, like he said, I'm selling my house, and then where I'm going to go? I'm going to have to go to a newer house, and somebody's going to buy my house, but that still puts me on the outs looking for a house. So it's a lot of supply. I mean, it's not a lot of supply for everybody that wants a home. This is what caused the housing market to rise, right? And with them cutting these interest rates, people are going to want to hurry up and buy houses at a cheaper interest rate, which will cause the housing market to go up again. This is why real estate is so important, and I encourage people, that's looking for homes to maybe now you might want to start looking. And didn't say buy anything yet because I forecast even another interest rate cut. But again, you can always refinance and stuff like that. You might want to talk to a realtor if you're encouraged on buying a home, but just understand the value of property. Okay. He was talking about how it's difficult for the government to zone certain areas for the builders to build homes. This is why your homes are very valuable. I myself might start looking into taking some equity out my home, right? Getting a home equity line of credit or a home equity loan, because I have a lot of equity in my house because the market has been going up so fast. I might be encouraged to take some of the equity out of my home, right, at this time. And he's cutting the interest rate, so that means I would get a better payment on the money that I take out my house. Okay, so the housing market is very valuable, man. Real estate is scarce, so it's all about supply and demand. It's not enough supply for the demand that's going to be coming to the housing market.
Earlier, monetary policy operates with long and variable lags. And I'm wondering how much you see being able to keep the unemployment rate from raising too much.
What's up, Fenici? What's up, Bolo? Appreciate y'all guys pulling up, man. Y'all in here. See Child's in here. So this is what really matters, man. This is what's gonna drive your pockets the way they should go. You know, and if you pay attention to this, you get a better understanding of this. It's very funny to me how we so drawn to stuff that don't matter. Right. This dude right here on the screen that you looking at talk. Oh yeah. When he talk, money is to be made. Right. Right now they are cutting interest rates for the first time in years. And they cut at a high rate just now. 50 basis points. He cut the interest rates. I got a feeling it's politically motivated. The election is around the corner. I've been talking about this. And here we are today. Today is he decide to cut interest rates, which means you can borrow money now for cheaper than you could yesterday. Okay? Let's keep it going.
Comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question, do you see today's 50 basis point move as partially a response to the fact that you didn't cut in July, and that sort of gets you to the same place?
So you're right about lags, but I would just point to the overall economy. You have an economy that is growing at a solid pace. If you look at forecasters or talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy is basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not that doesn't really answer the question that we ask ourselves, which is let's look, at this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew, it's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time. As you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant. But at the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really, it restores, it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on, and I think we've made real progress. We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Hi, Chair Powell. Greg Robb from MarketWatch.com. I was wondering if you could go through, you said just at the beginning that coming into the blackout, there was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this, but I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? After the CPI number came out, it was a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
Simon. Boy, this dude be tap dancing. That guy just asked him, did he think that because the markets were predicting these rate cuts, is that what he did? Man, listen, man. In my opinion, they don't want to see the markets crash right before the election. I keep saying this stuff, right? The election is coming up. So now he wants to cut rates to make the political candidates look good. This is obvious to me because he could have been start cutting these interest rates, because I've been looking at since the middle of the year towards July, August area, the inflation was coming down. It started to come down, and we were watching inflation come down. They did not ease policy or anything until just now, September. The next meeting will be November. What else was coming in November? The election. So by the time the election takes place, then they will be able to do whatever they need to do at that point. But this is obvious to me with what's going on here. But it's obvious to a lot of people in this room. That's why they keep asking these questions. And he said, his only answer is, we will only take in the data of what's going on at that time. You see, he's buck dancing, tap dancing. This dude think he's slick. This shit is funny to me.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. It will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about, is our policy stance where it needs to be to foster over the medium term our mandate goals. Yeah, so I can't say we have a bright line in mind.
Thanks, Chair Powell. Matt Egan from CNN. I know that you discussed earlier how the Fed does whatever the right thing is and nothing else factors in. But, in general, can you talk about whether or not you believe a sitting U.S. president should have a say in Fed decisions on interest rates? Because that's something that former President Trump, who obviously appointed you, has previously suggested. And I know the Fed is designed to be independent, but why? Can you tell the public why you view that so importantly?
Sure. So countries that are democracies around the world, countries that are sort of like the United States, all have what are called independent central banks. And the reason is that people have found over time that insulating the central bank from direct control by political authorities avoids making.
Well, let me get this clear. The central bank is a privately owned business, okay? And the question the guy just asked was, should a president have any power over the rates and stuff like that? Now he's trying to answer this, but don't get it twisted. When they say the central bank, it's not a federal entity. It's not government. Okay, this is privately owned bank. This Federal Reserve, they just call it Federal Reserve so they could brainwash you to make you think that it's a part of the government, but it's literally not. Their monetary policy affects America. So the government, the presidents and stuff, as you see, this is what I believe, this is politically motivated, right? But it doesn't matter to me because I'm an investor, right? I don't care why they cut the interest rates. I feel like in the short term, we might see some downward pressure, but over the long term, the market is going to continue to rise based off of this today. So, you got to pay attention, man. Any weakness I see, I'm going to be buying, right? Because why? They just cut the interest rates. That means there's more money out there for people to have access to at a cheaper rate. Now they're talking about the president. Should the president have any influence over this? These questions are coming up. We got an election coming. This is obvious to me why he decided to cut these rates today. And I said he was going to cut the rates today. I think I was talking about this last month. Why they're going to cut these interest rates. It's going to make Kamala look good, right? It's going to make the current presidency look good by him doing this. So when they get up there to talk, they're going to say, oh, we got a good economy. Our interest rates are low. All of this stuff they get to say now.
Monetary policy in a way that favors maybe people who are in office as opposed to people who are not in office. So that's the idea, is that, and I think the data are clear that countries that have independent central banks, they get lower inflation. And so we do our work to serve all Americans. We're not serving any politician, any political figure, any cause, any issue, nothing. It's just maximum employment and price stability on behalf of all Americans. And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public. And I hope and strongly believe that it will, continue.
Kyle Campbell for American Banker. Thanks for taking questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about. First, last week, Vice Chair for Supervision, Michael Barr, outlined his views for the changes to the Basel III Endgame. I'm wondering if you are in alignment with him on what those changes should be, if those have support on the board in a broad way that you're looking for, and if you think the other agencies are also fully on board with that approach. And then yesterday, other banking regulators.
You know what? Hold the second question.
Okay, sure.
Let me we'll give you the second question. So the answer to your question is that yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate changes. We don't have a calendar date for that, And as for the other agencies, the idea is that we're all moving together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment. And then, it'll come, the comments will come back 60 days later, and we'll dive into them, and we'll try to bring this to a conclusion sometime in the first half of next year.
And then yesterday, there were merger reform finalizations from the other bank regulators. What does the Fed have to do to align itself on merger?
I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate growth. Even though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the job market and growth than inflation? Are they not roughly balanced?
No, I think, and we think they are now roughly balanced. So if you go back for a long time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor shortage, so very hot labor market, and we had inflation way above target. So, that said to us, concentrate on inflation, and we did for a while, and we kept at that. That the stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance. So we did that. The sense of the change in the stance is that we're recalibrating our policy over time to a stance that will be more neutral. And today I think we made a good, strong start on that. I think it was the right decision, and I think it should send a signal that that we're committed to coming up with a good outcome here.
Is the economy more vulnerable to a shock now that could tip it into recession?
I don't think so. I don't. As I look, well, let me look at it this way. I don't see anything in the economy right now that suggests that the likelihood of a downturn is elevated. Okay, I don't see that. You see growth at a solid rate. You see inflation coming down, and you see a labor market that's still at very solid levels. So I don't really see that. No, thank you.
Yeah, he out. He hurry up and get the hell out of there.
Push it out there, and they hope people believe it. It's actually something I remember giving a speech back in 2018.
All right. So that was Jerome Powell speaking. Okay. So let me see if I can show this. This is what's coming out of the news. I've been looking in the news ever since he's been speaking. What up, Douglas Cook, Double Speak? Appreciate y'all pulling up. Right. They're going to incorporate some of Trump's ideas. I believe that as well. This today, I've been talking about this. I've been predicting this, that they will cut the interest rates. Well, they cut interest rates today, and they did it aggressively. Okay, this is aggressive rate cut. So I've been looking around, and I found this. Let me see. Share this on the screen. So all the talking points is basically right here in black and white. Okay, Fed goes big with aggressive half-point cut in interest rates. Okay, this is aggressive. The Federal Reserve went big on Wednesday, which is 20 minutes ago, lowering its key interest rate by 0.5 point, beginning a reversal of the tightest monetary policy in 2 decades, while saying it believes inflation is under control. So we just come through a situation, right, with the pandemic causing a lot of inflation. They printed a lot of money. As a result, the Federal Reserve were raising interest rates. They were on a raise interest rate campaign. Every meeting, they were raising interest rates. And now they're starting the cycle of interest rate cuts, okay? So there will be more cuts coming in the future. Remember, guys, the market is forward thinking, All of these markets move forwardly. They think in the future. Okay. It said there has been uncertainty right into the last minute whether the Fed would cut by 25 points or 50 points. It chose the latter. So they just cut 50 points. Okay. The move will bring some relief to consumers, who have faced the highest borrowing costs in 2 decades. This is what I be talking about with those interest rates. It's about loans. It's about money that you can borrow. You can now borrow it at a cheaper rate than you could yesterday because of this announcement today. Okay, so now when you go get your car loans and your mortgages and you just want to get a personal loan, it will all be cheaper money. Okay, when I say cheaper money, I mean cheaper at the rate you finance it, right? Your payments will now be lower. Okay. Consumers have it in 2 decades, but it is unclear how quickly other interest rates will drop. Much will depend on the course of the economy. The Fed began raising the rate as it's set for banks to borrow from one another 2 years ago, only to push it to the range of 5.25% to 5.5%, well, 5.25% to 5.5%. That rate ultimately turned out to be restrictive to economic growth, which was the goal. They didn't want people to keep spending money while they got all that free money. You know, that was good. You know, as well as sending interest rates on the auto loans. Here I go. I'm talking about it. As well as sending interest rates on auto loans, credit cards, and mortgages soaring. That's what I'm talking about, right? Your credit card payment, the interest rates would start to come down, so you won't have to pay so much interest on these type of things. Your autos, your credit cards, your mortgages. Okay, this would directly affect consumers, people that's buying stuff, right? So now it's cheaper for people to buy stuff. It's cheaper for people to borrow money. Where do they do with this money? Some people invest that money, buying other properties and stuff like that. So it will stimulate the economy. Now we're starting to stimulate the economy. It's encouraging people to go buy stuff now, what he just did, which is okay, right? It's good for my portfolio. This is more important than Diddy. Understand that, man. Everybody read Diddy indictment front to back. We talking about Diddy. Diddy don't give a damn about your household. Diddy don't give a damn. You're not related to him. But he's dominating the news when this should be dominating the news. Only people with any business sense is paying attention to this. The sheep are watching something that doesn't matter. It don't matter. Whether he get 100 years in jail or 2 years in jail, what is that going to do for me and my family? Right? We're paying attention to the wrong shit. So now if you were looking to buy a house, you might say, hey, they're cutting interest rates now. Now it's time to buy a house. Do you understand that a bunch of people running around here didn't even know that this was happening today? Because you're so stuck on foolishness and bullshit. You didn't even know that this guy was coming up here today with this meeting because this is not important to you. But at the same breath, you complain and holler about interest rates and about pricing in stores, about how high everything is. That's all you understand. Do you understand why? Now, guess what? Stuff is starting to get a little cheaper. It helps your pocketbook a little bit better as we speak. And now it's a cycle. So I feel like they're going to continue to start to cut these interest rates. Okay. It say, okay, as well as sending the interest rates on auto loans, credit cards, and mortgages soaring. Now with inflation close to 2%, which it was a little while ago, this ain't just happened, right? With inflation closer to 2% annual target, the central bank is reversing course and bringing its monetary policy more in line with actions taken by other central banks around the world. The committee has gained greater confidence that inflation is moving substantially towards 2%. It was doing that 2 months ago. I saw that when I saw the CPI data. It was pointing towards inflation coming down 2%. Why they just now decide to do it now? I told you, maybe because it's an election coming and they want the people to look good. All right. The committee has gained greater confidence, blah, blah, blah. inflation is moving substantially towards 2%, and judges that the risk to achieving its employment and inflation goals are roughly in balance. Okay. The Fed updated its projections for the interest rates and the economy going forward. The median view, which means the average view of the Fed members who set interest rate policy, now sees another 50 point of cuts this year and another 100 basis points or 1% point in 2025. So what is that telling you? That's telling you that they will continue to be cutting interest rates. We just been in the policy where they were raising interest rates for 2 years. Now they're going to be cutting interest rates. That's what it's saying right there in your face. Okay. It say it will see another 50 point cut by the end of this year and another 100 basis points or 1 percentage point in 2025. That will bring the federal funds rate to 4.4% at the end of the year and 3.4% by the end of 2025. So your money about to start getting a lot cheaper for you to borrow. This might cause a surge in the markets. This is setting up to be wonderful for all investors around. Okay? This is what I'm reading. But I knew this would come. When would you want to be buying? When they were doing all those rate hikes. That's when you wanted to put your money in the market. Now they're signaling rate cuts. This is going to be wonderful time for the markets. The markets are looking at this. Now you got investors around the world starting to, hey man, now it's time to invest. Okay? I was investing when they were when they were raising, because I know what the sun must come out. When people were panicking at all of this stuff, this is when you make the most money. This is when you wanted to invest. So this is good for my portfolio, for my family. This is more important to me than Diddy. It's just hard to get the people to stop thinking about gossip and drama all day. The people don't even know what's going on right now. This is how stuck we is in drama as a community. We don't even know what's going on right now. It's sad. The Fed sees economic growth at 2% in 2024, down from 2.1% in its June forecast, while unemployment is reaching 4.4%, up from 4.2%, and currently 4% in the June projection. It was past time for the Fed to cut rates, said Kelly Richards. I said that too. They should have been start cutting these rates, but now they cutting the rates because of what? Maybe it's an election coming up next month. See, this is all makes sense to me, right? Today, 50-point cut is a positive first step to bringing interest rates down to their normal long-term levels so that our strong recovery can continue. High interest rates are causing direct harm to workers and families, so the Fed should follow the data and act just as decisively as they did when inflation was heating up. So basically, this lady is saying you should have the same energy now that you had then when you were raising all these interest rates. You should have that same energy now when you start cutting interest rates. And me as an investor that's been invested in these markets when they were raising interest rates, I'm just sitting back watching because now it's fireworks about to come. Okay. Markets rallied on the news, of course, while you was worried about Diddy, right? While you worried about everything else, what he say, she say, we say, right? The markets rallied, right? You understand why I don't need to come on here every day worried about talking about somebody to make some money? The markets rallied. Guess who got to partake in that rally? Me. Because I'm invested and I'm being invested and I got the mindset to invest regardless of the prices, regardless of the news. Right? So now the market is rallying. Guess what happens? My portfolio go up. I don't need to come on here talking crazy about nobody. That's why I never do that. Unless somebody talking crazy about me. I don't never just come talking about people crazy. It's always a response to some idiot that's talking crazy about me. Which I'm about to start doing because guess what? I'm about to stop doing because all of those idiots that be talking about me, guess what they don't know? They don't know that the Fed just cut interest rates today because they so stupid. And they stuck on stupid. They don't understand this. Watch, we're going to hear these idiots keep saying stuff like this. Inflation is high. What are you talking about? You sure inflation is high? Or you just talking because you keep hearing people say that? You're not paying attention to what's really going on. I know that was boring to sit there and watch, but it wasn't boring for me because my mind has been trained to watch that stuff, right? You know what's entertaining to you? What you've been trained to watch. And Diddy don't give a damn about you. He doesn't even know you. But you watching his ass. The markets rallied on the news. The Dow Jones Industrial Average rising by more than 100 points in somewhat choppy trading. Speaking to the reporters after the announcement, Fed Chairman Jerome Powell, which is the man, the money man, right? We want to listen to the money man. Jerome Powell emphasized the larger cut that had been expected as recently as 2 weeks ago was not a sign the central bank was playing catch up. Yes, it was. Rather, he characterized it as getting a good start on bringing rates back to a lower level. So what does that mean? That means, again, they're going to continue this path of cutting these interest rates. Is anybody paying attention or just biz? This is why you can't blame anybody for your situation, because you're not paying attention. You're worried about the wrong stuff. Like, really? We don't think we are behind, he said, but you can take it as a sign we don't want to get behind. Then why when he says that, why such a aggressive rate cut? It looked like they playing catch up. Powell also said the Fed would make its decision meeting to meeting. He always say that. And there was nothing in the economic projections that were part of the meeting to suggest the committee is in a rush to lower rates. Well, you just lowered them the aggressive you ever did. Rate cuts for consumers will not suddenly fall from their high levels as the market has priced in Wednesday's cuts. Mortgage rates, for example, have fallen from a peak of around 8% to 6.4%, right? But we got people still saying mortgage interest rates are through the roof. They are, because my interest rate is 2.25%, which I don't think we'll never go that low again. You know, we should be around 5%, maybe 5%. That's good. You know, if we get down around in there, I might consider, you know, selling my house, but I probably won't, because I can always park money here. This is a money pit for me. You know, my house is my piggy bank, you know. While they could drop a little more, it won't be a dramatic decline. Savers, however, are already seeing easing of the yields on saving and money market accounts along with certificates of deposit. Interest rates are going to be lower over the next year, said James Reagan, director of wealth management research. The Fed decision, coming as it does, was less than 7 weeks to the 2024 presidential election, is likely to be met with criticism from both sides of the political spectrum. Absolutely. It's insane to me how me as a YouTuber, a regular person in the world, was able to see this before it happened. Right? And I was saying that they're going to do this because of the election. And now they're doing this because of the election. Right? It says it's going to be met with criticism. You're going to hear the political candidates talking about this. This more talking points. Don't get swayed in the talking points. Trump 2024, man. You know, I'm not getting swayed by these talking points of the economy is getting better and all of this stuff. The economy was been getting better. You just wasn't paying attention to it. You was paying attention to the bullshit, to the foolishness. Period. Right? Former President Donald Trump publicly criticized Powell during his first term in office and has suggested that the White House should have more input to Fed policy. Democrats has also criticized what they see as a Fed wavering Wall Street more than Main Street, arguing that the high interest rate disproportionately hurt lower income Americans. Okay, the Fed officials and mainstream economics have been puzzled over why interest rates did not have the same chilling effect on the economy in the post-pandemic recovery period as previous times. Some have pointed out that to massive stimulus from Washington to fight COVID, as well as changes such as remote work and online shopping to explain why consumers, I always say that, I didn't see no T, why I keep saying that. Why consumers were able, it's the same thing, customers, consumers, you all the same, right? Why consumers were able to maintain their spending levels even as rates rose. While the higher rates did have some effect on curbing inflation by dampening consumption somewhat, the restoration of supply lines disrupted by COVID shutdowns seem to have had the most effect on curbing inflation. A drop in energy prices over the past year has also been a key factor. Right? So the price has been dropping, the economy has been going in a good direction, but now they just want to come with these rate cuts. I told you they would. I've been saying this. And then down here, they talking about the White House again. No matter who wins the race for the White House, the Fed's job may well be more difficult in 2025 and beyond. Expiration of some of the tax cuts that Trump won in 2017 will complicate budgeting on Capitol Hill. Some of Trump policies, such as increasing tariffs on imported goods and severely curbing immigration, could make goods more expensive and labor more scarce. All right, where they go from here is also entirely dependent on the election. This is crazy. Trump's policy sounds significantly inflationary. If Harris wins, she may well be constrained by a Senate that is Republican hands, making negotiations over the budget fractures and serving as a brake on some of her proposals, such as incentives for first-time home buyers and increased taxes on higher income individuals. Okay, so we got that. We see what's going on here. We read that. All right, so let's go look at the market, see what the market is doing. Let's go look at this. See what the market is talking about, right? This is what matters to me. Bitcoin's up 4.5%, right? In the past hours, down a little bit, but over the week it's up 5%, right? Ethereum is down over the week, but in the past hours, up a little bit. Right, BNB is up 2.65% in the past week. Is up all across the board. Here go XRP, my little favorite token, right? One of my favorite tokens right here is up 7.5% in the past week. Right, so we understand what this policy does to the market. It makes the market move. Okay, this is, you could put money in your pocket as you're sitting back talking shit about everybody. Pay attention. Right, this is the past day. Right, this was leading up to his speech, and right here is when he started talking. Now we going up, right? This is all the people with the excitement overreacting. They think we're going to the moon, and now it's coming back to reality. But I'll consider a slow trickle up. You know, it might go down a little bit, it might go up, but either way, any weakness, I'm buying this, right? Because you can forecast more rate cuts in the future. All right, you can see the past 7 days on Bitcoin. We were down in here. I was talking about this stuff, man. I've been talking about this stuff. And now, if you were buying now down and around these levels, you would see a substantial gain in your portfolio. All right. This is what can happen for you and your family, right? The hell with everybody else and what everybody else talking about. We must pay attention to this stuff. So what did we learn today? All right. Today we learned, let me see what XRP is doing. This my little token right here. Let me see. All right, we were going down, leading up into his talk. He started talking, we start rising. Good. Right? In the past 7 days, we up. Right? We were down in here, and we going up. Right? All this chippy chop, we ain't worried about that. Where we go from here, to me, if we go down a little bit, we're going to continue trickling up. They're setting this up for a rally. I swear, if Donald Trump get elected, the market is going to go insane. I'm telling you this now, okay? So don't say I didn't warn you, right? Yo, Biz, I'm listening, big head ass. Oliver Green, appreciate you. Mel Dub in the building. KB in the building. What up, KB? Yeah, man, we got breaking news, man. The Federal Reserve just cut interest rates by 0.50%, 50 basis points, which means all the money you borrow will be cheaper. Okay. Economy is going towards the election. This is all, I predicted all of this stuff. Anybody that listens to my channel knows that I've been talking about this, right? Now we have the meeting in September. They cut interest rates. They don't have another meeting until November. What else is happening in November? The election. So now you will start to see these political candidates use this as talking points, right? So now your money is starting to be cheaper for you to borrow. They're trying to stimulate the economy. This is why I said this earlier, right? But this is why real estate is so important, right? Because these interest rates are going to encourage more people to buy more homes, which would do what? Make the prices of homes go up, right? Why do you want to park your money? And when the when the market was crashing, what does that do? Make the prices of home go up. This is why real estate is so important, guys. This is why you want to buy property. It's the truth. It's the truth. You know, when my house has gone up dramatically in value ever since I purchased it. Ever since I purchased it. And I bought this house in 2020. My first move-in day was January 1st, 2020. I bought this towards the end of December, and I moved in 2019, right in COVID, right during the pandemic, when they had the lowest interest rates ever. And ever since then, it's just been going up in value. Through all of the nonsense, through all of the rate hikes and all that, my home price has just been going up, going up, going up. So now with them cutting interest rates, allowing people to borrow money for cheaper, what do you think my home and my price is going to do? The price of my home is going to do? It's going to continuously go up. This is why real estate is so important, right? And also the markets, when you invest in, you don't invest for today. You don't invest for next week. You invest for years from now. We see the trajectory of the Federal Reserve. They are going to be cutting interest rates from now until the end of next year. He just said that, right? So position yourself that way you can reap the benefits of these rate cuts. Because once again, the more they cut rates, it encourages people to go buy cars, go buy, their credit card payments get lower, right? Your mortgages get lower. Why would they do this around election time? So that the people in power right now, which is Biden and Harris, they can have talking points and say, my economy is getting better. People are buying homes now. They're just going to use this as political means. When I can see this coming because I pay attention to this stuff. This is more important than anything that people think about P. Diddy. P. Diddy is not your brother. P. Diddy is not your cousin. It don't matter if you get 100 years or 60 days. What the fuck does that do for biz? Nothing, right? What does this do for biz? Now I understand that my credit card payment is going to be lower. I understand that I can go get a loan now for cheaper, right? This is why I keep talking about credit scores are very important, right? I understand that if I wanted to buy a car right now, the interest rate on that car will be lower, which means more money in my pocket. And that money trickles to the markets. The markets will respond for that money. Okay. What's up, Mary man? We in this? Yes, sir. We in here. Mel Dove said, that's my feeling about gas prices. Before these silly people praise Biden for dropping gas prices, I argue he should have done it 3 years ago. Exactly. I agree. The economy was slowly coming down. We could see this from July. When the CPI data was coming out, we can see this, but every time they went to these meetings, they would not cut interest rates. I'm like, bruh, the economy is cooling off. Why you don't want to do this? Now, right before election, they start cutting interest rates. And he did it aggressively. This ain't no 25 pace. This is a 50 basis point, which is major, okay, cut. He's encouraging more spending now, trying to stimulate the economy, right? When they raise the interest rates, that's encouraging people not to borrow money. People say the prices is too high, right? Your interest payments are going to be too high because they're raising interest rate. They are encouraging you to stop spending money when they do that. Now it's the opposite starting to take effect. This is great for anybody that's been invested. Anybody that has any real estate, any type of stock portfolio, anything, this is great news for you guys. You know, And anybody that's not invested, I encourage you to get invested. You know, we got the housing market. Man, the housing market is going to be. That's why the housing market, the real estate world, is so solid because it performs in any market. Whether the market is up or down, the housing market is always in demand. Always. It's always somebody that's looking for a home, you know, and those people push the prices of the houses higher. This is why real estate is one of the best investments in the world. Next to Bitcoin. But I like to say that. Every 3.5 years, they fuck with us. It's a fact. KB in this thing. Yep. Every 3.5 years, they fuck with us. Why? Does anybody know? Because of the election cycle, right? Every time we get close to an election, they start this. They want to make those candidates look better than what they are. And this is what you're about to see. And you got to think, the holidays are coming up, right? Christmas is in the background. Thanksgiving, right? Now people are encouraged to go spend a little bit more. Maybe you could go get that loan you wouldn't have got 6 months ago because you're going to get a better interest rate. You're going to get a better deal, right? I'm encouraged even more to go get a mortgage, take some of this equity out my house because I'm going to get a better deal than what I would have got 6 months ago, right? Got to pay attention to this stuff, man. This can really affect you. The guy that I just showed on TV, Jerome Powell, is one of the most important people when he talk because the markets move when he talk. We worried about Diddy though. What's wrong with us, man? Why are we stuck in the trap? It's so hard for people to listen to that. But again, it's like riding a bike. Once you listen to it, you don't understand. You keep listening to it, you start to understand. Then you start to understand this dude is full of shit, right? You start to understand like, man, this dude buck dancing. You can see what he's saying is bullshit. Talking about we gonna take it meeting to meeting. No, sir. You've been doing it. You've been plotting to do this. I've been telling people you were gonna do this, and now you do it. And I'm just a regular guy on YouTube, and I can see that you was about to cut these interest rates. I didn't see you cutting it this hard though. From a 50%, a 0.50% rate cut. You guys don't understand how significant that is, right? That's a major rate cut. So if just think, if your interest rate was 10%, now it's down to 9.5, right? If you borrowing $500,000, that 0.5 is a lot of money, right? That might take $200-300 off your payment right there. That's a lot of money when you're dealing with a big sum of money, right? You got to think houses cost $500,000, $350,000. So these interest rate, when they start cutting them like that, it take a lot more money off the table and put it in your pocket. But we worry about Diddy. Where is the disconnect, guys? Where is the disconnect? We got to get more involved with what really can matter and really change your life, right? What really could affect your actual life when you go outside and you in the world, you can start to see, is it a good time to buy now or is it not? I'm telling you, they're going to do more interest rate cuts. This is the first one. Now we're getting in the rate cut cycle. Okay. They're going to be more interest rates coming. I was always told you don't move when it first happens, right? Wait for the second, the third cut. It's coming. You're going to get a better deal. What's that going to do to the housing market? The housing market will remain unaffected, man. It will do nothing but make it go up even more because when they start cutting these rates, it's more people going to want to go get mortgages. You better believe some people just applied for mortgages today when they heard this, right? What does that do? Make the housing prices go up. The builders can't build fast enough. You got zones. You got to get zoned for a place to put your houses and stuff. It's too much demand on the housing market. It's always going to be in demand. This is why home ownership is a key. You got to have home ownership. The market will continue to rise, man. You know, housing market is a strong staple in the United States, man. And it's just the truth. You know, so you want to obtain home ownership and you want to attack at the right time so you could get a better deal, understanding that in the future, you will reap some benefits. Since I've lived here in 2020, January 1st was my first day to move in here. Everybody was out partying on New Year's. I was just walking in my new house like, oh, I'm in here, right? 2020. It's 2024 now. I done gained $130,000 equity in my property. This is not a brag. So when people, all he do is brag, 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 brag. I don't want to hear that shit. I'm using my experiences to hopefully help somebody else, right? In 4 years' time, which is unheard of. You're not supposed to get that kind of increase in 4 years. That's crazy, right? For your house to go up that fast in 4 years. When was that 4 years? During the worst time in the world, the pandemic. My house value went up that high. Now we starting to cut rates. So that means people on this block, they can start buying houses now for cheaper. When they buying these houses at these prices that my house is at right now, guess what that's going to do? Push the value of my house up even more. That's crazy. But this is what happened. This is why real estate is one of the best investments, you know? And I like Bitcoin. So now, why do I say I like Bitcoin? Because it's scarce and scarce and scarce. So what's going to happen? When these people borrowing all this money, when they make these profits, what are they going to do with the money? They're going to look to invest it. Well, people that's smart. Dummies going to take the money and go spend it on foolish stuff. But people that's looking to invest money, they're going to be buying assets, stocks, cryptocurrency, which is going to push that market up even higher, right? The hell with Diddy. He deserve everything he get, man. He been stealing money from people. The way he beat that girl up, you know. I looked at it, but I tell you what, I knew this meeting was coming out today. I stop everything I'm doing and go talk about this, because this could change your life, right? Let's see what the S&P 500 doing right now. Let's see what the S&P 500 doing right now, right? This is the S&P 500. Right? You don't want to talk about this. You don't like to talk about this, but look at what it's doing. Right? We're going to look at the past week. It looked like S&P knew the market was going to go up, don't it? Right? It knew the market. It knew this was coming. Look at this. A straight climb in the past week. You understand why Biz don't got to come on here talking about people? Right? This is when you're supposed to buy right here. Right? Look at it. It's going up. I don't got to come on here and talk about you guys. For what? I only respond to the foolishness that you guys talking about. Now look, see this? It's starting to go down. This is what all the excitement, right? Look at the time. He starts talking at 2 o'clock, right? The cut come out at 2 o'clock. Look at 1:55 p.m. Look what happens to the market with the excitement. I always say you don't move when it's excited. We're not moving right here. I want to wait until this market start going down before I start buying, understanding that they're going to have more rate cuts coming, understanding what they just did with the monetary policy, understanding all that shit. I'm waiting for this market to go lower. I want to see it go lower. So that's when I want to start buying, right? Understanding that the future is looking bright for the monetary policy of the United States of America. That's where we at. So I thank you guys for pulling up, man. If you don't know, I went over the Jerome Powell speech in its entirety, and I listened to the questions that they were asking of him. In my opinion, this signals that the Federal Reserve feel confident with inflation and the way inflation is coming down. That's why they cut these rates. And I also feel like this is a political move. You know, of course, this is a political move, okay? But it doesn't matter to me. They made the move. That's all that mattered to me. Right? I don't care why they did it. I just care that they did it. It's definitely a political move. You can see it. Right before the election, the next meeting won't be until November. Right? The next federal meeting won't be until November. So right before November, they make this policy change. And then here we go, come November, when comes the election. Right? But through it all, it's Trump 2024 to me. I will be voting Donald Trump for a lot of reasons, okay? And this, my friends, is one of them. What up, Clara? Clara in this thing. Clara said, let me hold something. Clara, I don't got it. Clara, I just paid my mortgage. I don't got it, Clara. I don't know what you talking about, man. What you need to hold, man? Whatever you hold, man. I got 5% interest, like the government. The government want 5%. So I'm just trying to help you guys, man. You know, now you can buy your homes a little bit more cheaper than you could 6 months ago, right? if you're in the housing market, it's a good time to call your realtor and start seeing what's available and see what he say, right? And converse with your realtor, not biz, but just converse with your realtor. As we see, they just start cutting interest rates. Remember, they just start cutting interest rates. So it will be another rate cut coming and another one after that. Because they're telling you that they want to get it down to 3.4%, whatever. We still at like 5%. So we know we still have future rate cuts coming, right? This is why I will be investing. Anybody want to buy something? You heard? Just pay attention to this stuff, man. Trust me, guys. This is more important than Diddy. This will affect your actual pocketbook. You know what I'm saying? And I will be voting for my boy Trump. And let me put this on the screen right here. Let me take KB comment down. KB, get him off the screen right quick. Be fearful when others are greedy. Okay? And be greedy only when others are fearful. It's the best to ever do it. Warren Buffett, right? Only when others are fearful. Right now, what's happening? People are getting excited, right? Pay attention. People are getting excited. This is what Warren Buffett said, you be fearful. All I'm doing is waiting for the opportunity to exploit the market. It's not an opportunity for me to be buying right now with them doing all these rate cuts because the market will be rising. I don't want to jump in that market right now. I want to be patient and wait for something called a black swan event. Some event that don't nobody see happening. That's when I want to attack the market. Like COVID-19, that was a black swan event. Nobody saw that coming. That's when I bought my home, right? That's when I started investing in the market. That is literally when I started investing in this market. When COVID-19 came, and I made the most money during that time, right? So right now, I'm just watching. I'm watching. I'm like a shark. I'm watching. I can't wait for this market to start dropping, right? I'm just watching because everybody's in excitement mode right now, okay? So you guys do the same, man. Mel Dub, nothing is more important than Diddy. What'd he say? Nothing is more important than Diddy, Biz. You didn't get the black memo? Bruh. They don't understand, bruh. Everybody in the world is watching this clown. Nobody in the world, except for the rich people and the investors, knew that this meeting was going on today at 2 p.m. because this don't get your attention. And they blame the white man. How? This the same way they put Diddy in the news. You know this been in the news too, right? It's just you're not looking for this shit, right? You're looking for the negative shit, right? This is not my problem. This is your problem, right? This is not a black or a white thing. This is cultural thing. This is what you've been taught as a kid. I don't blame you, but I understand you because I was that too. You got to be transformed by the renewing of your mind. You got to think a little differently. Nobody's better than you. It's just they move different. They say knowledge is power. That's so factual, right? When you know what they know, then you can do what they do. If you know the tax codes in and out, you can make decisions based off of the tax code. But if you don't know, then how do you understand? Especially if you keep consuming dumb shit, you will be nothing. You will have nothing to understand because you just, oh, did he this? Oh, did you see what happened with this person? Oh, did you see what happened with this person? Biz over here like, yo, man, they just cut interest rates. Man, I don't want to hear that shit. Yo, did you see what money is it making you to listen to that bullshit? Somebody explain that to me. Absolutely nothing. Nothing. Can this make you money? Absolutely. Because now you know, okay, if you were in the market to buy a home, guess what? It just got a little bit more affordable for you. You understand that or no? At least know the lingo so it can be explained to you. Facts, VMAC. That's facts. At least understand the lingo that they speak of so you can understand what they're saying, right? I didn't know what all these terms meant. I just had to keep watching this shit because in my brain, I'm like, yo, how these people doing all this stuff? I need to learn this shit. And then it made an impact on me to want to learn what they know because they're not smarter than me. They just know stuff that I don't know. That's it. Once I know what they know, I get a little bit more competitive You know, once I start learning it, I don't know everything they know. That's why I'm still learning. I'm still watching. I'm still paying attention. Because if I knew everything, I'll be a genius, right? So I don't know everything. So I'm steady watching them. What is he saying? Why is he saying this? Then I listen to other people speak. I do not want to be the most smartest person in the room, because that's a room I don't want to be in. I don't want to be in a room where I know every fucking thing. I need to get out of that room where I know everything. I need to get in a room where I know the least so I can learn. You can't learn if you know. Man, we got to change the way we think and way we operate. This will help our community more so than anything else you could think of, man. It's your mind. Your mindset stop you from accomplishing a lot of your goals, man. It's your own mind. You are your own worst enemy. Okay? Cortez in the building. Yeah, you want to catch this replay, bro. It might be boring. I'm telling you, it's boring to listen to the shit, especially when you don't know it, right? You just be like, man, what the hell am I listening to? But the more you get comfortable understanding, the more you start to learn and you start to say, hey, what's up? But in my opinion, I'm rocking with Trump, you know. So that's on y'all, man. Y'all make y'all own decisions. I'm voting my wallet. Trump said no tax on overtime. And he also said this.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world, and we'll get it done. If crypto is going to define the future, I want to be mined, minted, and made in the USA. It's going to be. It's not going to be made anywhere else. And if Bitcoin is going to the moon, as we say, it's going to the moon, I want America to be the nation that leads the way. And that's what's going to happen.
When I hear a president talk like that, I'm like, wow, I can't wait. I hope he get elected. And this is another one of the quotes I like, Warren Buffett. Someone sitting in the shade today because someone planted a tree long ago. Man, you understand you got to change the trajectory of your family and your lineage. If nobody did it for you, you could be that one that changed it for your family, you know. You could teach your kids things in-house that they won't teach them anywhere else. You could teach your kids things in-house that could benefit your whole lineage. The books say, raise up a child in the way it should go, and when he get old, it will not depart from it. That's what the books say, right? If you believe in that book, you understand it makes perfect sense, right? And this one here. The 10 things people learn too late. Warren Buffett. Everything is temporary. So when they were doing all these rate cuts, you were crazy. You were going out of your mind. But everything is temporary. You got to take advantage of it while we got the chance. While the economy is at its worst and the market is tanking and everybody's crying and acting like a baby, that's when Biz is looking for the money. I'm trying to buy all that shit. While everything is at the lows, I want to buy. I don't want to buy when it's excitement, because Warren Buffett told me, right? He told me this. Be fearful where others are greedy, right? And you be greedy only when others are fearful. So these are just a few things I go by, man. Just listening to somebody like this that's worth 200 billion plus, 200 billion plus. I'm listening to him. You know, this guy that everybody's paying attention to named Diddy. Take that, baby oil Diddy. You know him? He only worth $1 billion. You know that, right? This guy right here on your screen, 200 billion, okay? But what Diddy talking about? What is this dude talking about? All your entertainers and all of them. LeBron James, all of them. Michael Jordan, all of them. What? How much is this dude worth again? 200 billion. What did he say? He said, be fearful when others are greedy. So when everybody's excited and everybody's making all the money, that's when you should be the one selling your shit and getting the fuck out the way. Because only can go one way. If it's keep going up, it only can go one way. What goes up must come down, right? That's what he said. And he said when others get fearful, when that pandemic came around, Everybody in the world was fearful then, huh? I made the most money because of this quote right here. Because I'm listening to this. When others are fearful, that's when you be greedy. Right now, interest rate cut, everybody's excited. I'm chilling. I'm just sitting back. I'm waiting for something to happen in the market, in the world, to cause a whole rigmarole. Everybody gets scared and panicky. That's when I'm going to be greedy, because that's what this $200 billion guy said. 200 billion, okay? Not no billionaire. Why? What is Diddy talking about that's going to help you make any money? What is going on with that case that you can get anything from? Right? You better pay attention to your people that you follow, man. I respect this guy because of what he's done in his life, and he's been an investor. That's what he is. So if I want to be an investor, I need to be paying attention to what guys like him say. Because if he's telling the whole world this, what you think he told his kids? You think his kids don't understand this shit? Because he got to feel comfortable when he pass away that his kids can continue his legacy. And he's an older gentleman. He's up in the 80s and 90s. Right? I'm watching. Every time he speak, better believe I'm watching this shit. Fuck everything going on. When this man opened his mouth, I'm like, what he say? What? Run that back. Let me hear what he said. It's for obvious reasons. So I'm not going to hold you up. We're going to get back to the fuck shit. We're going to have fun. We're going to laugh. We're going to joke. But at least we got some understanding on what's going on today. We watched the boring press conference, but it might have been the most important thing you've seen in a while by listening to that white man talk about these interest rates and these jobs and all this this housing market. He spoke on all of that stuff, right? And then pay attention. Why is it happening right close to the election? Do you guys know this is the last federal meeting of the Federal Reserve before the election comes? Or you don't know that? But you know Diddy got baby oil. Everybody know he got 1,000 bottles of baby oil. Baby oil Diddy. We all know that shit. We didn't even know this guy was talking today. Ain't that something? Just pay attention, man. Now, I encourage you to go look this shit up. See what multiple people have to say about this. Right? Don't just listen to Biz. Listen to multiple people. Pay attention to this shit. Take an hour out of your day to go see what is the impact of these interest rate cuts. Then go back to the fuck shit. Because I'm going to tell you something. You might not like this, but Biz going to keep it 100. No matter what people say on this internet, do you know you don't have to catch it while it's live, right? You do know that, right? You do know they got something called rewind. You can rewind that shit, right? So if you're watching something and you're trying to learn something, you can always go look at some later and press rewind, right? You can always get entertained at your time. It doesn't have to be at the other person's time. When shit like this going on in the world, bruh, I'm got to push rewind. I don't got no choice but to push rewind because I need to see what's going on. It's a rewind button on your phone too as well. So you understand that shit, right? You don't have to see everything when it happened right away, right? We all know baby oil Diddy, right? But if I just was watching it today, I could catch all the information at my speed because I could fast forward, I could rewind, I could look through. It's almost better to watch it later if you actually think about it, right? Because you could skip through shit you don't want to hear. You could jump around, bounce around. Same like music, man. So pay attention, man. You know, it's what you do with your own life, man. That's gonna change the trajectory of your family. Okay? What I just showed you today might have been boring. You might not want to listen to it. But it's probably the most important shit you heard in a long time. They just cut interest rates by 50%. 50 basis points. 0.50 percentage rate cut, which is going to affect your credit cards. Okay? It's going to affect your mortgages. It's going to affect your car loans. It's going to affect your pockets. It's going to affect you as an individual. Diddy ain't doing a damn thing for you. Okay? All right. Now I'm out of here. I'm about to go laugh and joke and catch the replay of whatever I missed while I was live, because I can do that, right? And catch up. But I do know they just cut interest rates today. Who else know? Salute to y'all, man. Hey, Miss Akimi, what's up, Miss Akimi? I see you pull up. I know you be in the bushes chilling, you know, screenshot Poppy. Yep, salute to you for listening, bruh. You know, I can't give the information to nobody, man. So I appreciate you listening. Shout out to Mel Dub for being in here. Shout out to KB. I appreciate KB, man. He brought us all together, man. He gave us the platform to speak, man. Y'all got to get a man his flowers, man, because once again, man, without that man bigging up my channel, shouting me out, I wouldn't have people to talk to. It's just simple as that. You know, I'm always going to respect him for that. You know, and more things than just that. You know, he put his life on the line when he be talking. People say, oh, he just, man, the things that man say out of his mouth, whoo, they don't want to hear that shit. You know, so salute the bus life, man. You know, shout out to Meal Ticket. That's my bro. Shout out to 86K. You need 86K. We on the 5.8, 7.8, 9.8. You know what it is. Shout out to Damn D, man. You know, Damn D get me caught up on these knuckleheads because I refuse to watch them. So I watched Damn D watch them, and he's a funny, talented brother, you know. Shout out to TJ, one of the most funniest dudes on this app. Y'all don't listen to TJ, something wrong, man. You gotta listen to TJ. You want to be entertained? That's who you want to listen to. And shout out to a lot of people on this platform, man. Miss Akimi, Miss Yo Thoughts. Miss Yo Thoughts brought me in line yesterday or 2 days ago. She don't even know it. I said, I hate these people. She said, no, you don't. You can't hate these people because you try to help them. And I had to think about it. And it brought a scripture to my mind. It say, pray for those who spitefully use you and try to bring you down. Matthew, I forgot the book and chapter, but it's a verse in there that said, I'm supposed to pray for people that's wishing on my downfall. It's in Matthew. Right? And Miss Yo Thoughts put me back in line. Biz, you don't hate these people. How do you hate these people when you do what you do? I said, you right, Miss Yo Thoughts. I don't hate them as a person. I hate the things they do. I hate their character. You know, I hate that spirit in them that's making them do these things. So shout out to Miss Yo Thoughts for bringing Biz back in line, you know. And shout out to Bolo, you know. Shout out Double Speak. Double Speak always up early in the morning talking positive. You know, I was in Double Speak chat when I brought the scripture to mind. The gangster pastor, you know, but this is the things we as a community don't want to pay attention to, and this is why we are in the places we are. And hey, that's on y'all, man. So salute to y'all, man. Denise 2015, I mean 215. Appreciate you pulling up. So yeah, Mary, man, we in here real shit. So I appreciate y'all, man. You know, and I encourage you to watch the replay, even though it might be boring. You know, you might learn something. You're going to hear a term that you didn't hear. You're going to be like, what the hell he just say? Just keep watching, man. Understand that dude is full of cap, yo. He's capping. And you got to understand that Jerome Powell dude, he controls the monetary policy of the United States of America. Why wouldn't you want to listen to that shit when all you want to do is get money? You talk about people on here for money. You do everything in your life to get money, but you don't want to listen to the dude that controls the policy on the money. Make that make sense. It don't. I encourage you to listen to it. I put the whole talk, his whole speech is on here. So shout out to y'all, man. 86K going live in 30 minutes. All right, we in here. We in there. You know, hey, 90% of his chat don't even know that this happened. It's not a knock on them. I'm trying to weasel my way in so I could get them to pay attention. That's all Biz trying to do. I'm trying to help these people that hate me. You know, I'm doing what the Bible said. It say, pray for them and bless them. That should say, bless the people that spitefully use you. I said, what you talking about, God? Boy, Jesus, one of a kind, man. So the people that talk crazy about you, that use you in the wrong way, that try to hurt you, that try to slander you, that bring you down, you supposed to bless them? Are you serious? Man, Jesus is one of a kind. Because in the book of Biz say, Try Jesus. Don't try me. But I'm learning, you know. This is why I come on here and I leave my videos public, you know. So hopefully the haters learn something too. Because it's bigger than the haters. The haters got children. You know, and they children can benefit from the information they might pick up from me. And you know something? They pick up information from me. They just don't want to give me the credit for it. Or they don't want to give me acknowledgement for it. But that's fine, you know? Because I'm getting acknowledgement from the people that actually support me. So I appreciate all of you guys for pulling up, man. Salute to KB, man, for getting this all popping. I heard KB say he gonna lower the prices on his hoodie. This guy, KB, I paid top dollar for my shit. My hoodie should be coming any day now. I just bought a hoodie and a shirt. But I paid top dollar. And he talk about he about to lower the prices. I need a refund. Shout out to the platform, man. No, KB, I don't need no refund, man. You done blessed me so much, man. I get paid from YouTube because of you, sir. So I appreciate everybody in the building. You know, salute to everybody here, man. Y'all go ahead and have fun. Hold on. It looked like I got a super chat. I didn't see. Let me see. Oh, no, that's Juicy Fruit with a membership. Thank you for the membership, Juicy Fruit, for 10 months. She said, hit the like button. So that's it. And guys, I still have this Bitcoin fund right there, man. I can't do nothing with the Bitcoin fund if we ain't getting no donations. I ain't getting no money towards the Bitcoin fund. I definitely want to give you guys some cryptocurrency, but you know, nobody want to give no Bitcoin. Remember, I'm not spending this money. I give my kids my money through Zelly. The Cash App is for you. You know, that whatever comes in my Cash App, we put it on the screen and we don't hide anything. So when you guys donate to Biz Cash App, understand all of that money is going back to the community. I'm not taking $1 and going to spend on myself because I benefit greatly from, you know, the blessings that God has given me. And I just try to give it back a little bit. So hopefully you guys learned something today. Other than that, man, let's roll out. Miss Akimi say, thank you for bringing thank you for bringing shit that affects our everyday lives. Yo, facts, Miss Akimi. You guys understand? The Federal Reserve has cut interest rates today by 50 basis points. So your borrowing money will be cheaper. That affects you and your household. If you didn't learn anything else, you learned that today. All right, now let's go talk about Diddy. Take that. Oh, baby oil guy. Baby oil Bishop Diddy, man. I holla at y'all. Appreciate everybody for pulling up, man. Salute.